Well, I'd compare two factors: the politics and the virus trends. In the US, we have the uncertainty of the election. We also have worsening virus trends. Compared to Europe, virus trends are improving. The politics is, for European standards, fairly calm. European markets haven't run quite as far ahead as the US, so on a regional basis, probably we see a bit of value there in Europe. But the big question for me when it comes to markets is what is really driving the market? It seems to be a combination of improving economic data, and it is looking fairly good, at least over the last couple of months. The continued help from central banks and governments with their aggressive policy measures, and the fact that markets are basically working on the assumption that a second wave will not lead to major lockdowns in the US. If we violate that assumption, then markets will probably take a turn for the worse. But even though markets have run a long way, keep in mind, markets are forward-looking. They are basically telling us that the underlying economy is fine, and in the long run, we probably get back to the pre-pandemic trend. I think that's a fairly sensible assessment as long as we avoid the second wave.
The jobs report yesterday, Kallum, 4.8 million jobs added back to the US economy. What does it tell us? Because we've also had this reclosure of communities that we've been talking about. So, in restaurants that opened up and then forced to shut down. Do you think the jobs are going to come back quicker than many anticipate?
Well, the US is a highly flexible economy. It has one of the most lightly regulated labor markets in the advanced world. So typically, if you find a snapback in spending, it usually shows up in the jobs numbers. So the economy is behaving as you would expect. I keep in mind in the US, the big driver of the recovery so far is the very, very generous fiscal handouts. Income for the household sector actually increased in April and a little in May. So households now have a little surplus income. They were locked down for a while. They couldn't go to the shops and they couldn't spend, and now they are spending that money. Someone's got to produce those goods. Someone's got to sell those goods, and that's what we're seeing now in the labor market. So the combination of the flexible economy, the aggressive policy is showing up now in the jobs numbers. We just have to hope that that data, which came before the recent spike in the US, doesn't take a turn for the worst as the case numbers spike in the next few weeks and months.